Ah, yes, the stock market. A thing everyone loves until it finally decides to go down. And everyone thinks, ah, yes, this thing that's worked for a very long time, it's broken. It's broken forever now, and everything has to go into gold. And after that, you know what? Not even gold's good enough. It's going to go under my mattress where the IRS can't get to it. That's the stock market. The stock market is a very easy way to make money if you have time. And that's the key. Is only if you have time. See, you can make money outside of in the stock market without time, but you must take a lot more risk. That is the basic trade-off in the stock market. If you have time, then making money is very easy. If you don't have time, then making money is very hard, and you're going to have to take on a lot of risk. Now, the basic parts of the stock market are very simple. We have individual stocks. Now these individual stocks right here, let's just see this little piece of paper here is a stock. Obviously, I mean, you can get stocks in paper and now, but not much use of them anymore. They're all on the computer. They're all on Robinhood or Schwab. bad news coming out about Schwab right now. Fidelity, whatever the heck. They're online and you have a share. This stock is a share of a publicly traded company, whether that be Apple, Google, CrowdStrike, anything. And it's basically saying, I own a piece of this. I own a piece of this business. And that price is traded, at least on the stock market. In this case, we're talking about things that are publicly traded and every market day that doesn't happen to be a holiday, like Martin Luther King Day or whatever other holidays that happen to involve days off of trading. It trades on the open markets, and based on the swings in the stock, consumer sentiment, whatever the heck people are thinking of that day, what Jerome Powell ate for breakfast that morning, the stock will either go up or it will go down. And that's pretty much it. That's the basics of the stock market. Now, if you want to get into a little bit more, we have ETFs. ETFs, I cannot draw. I'm going to try that again. ETFs. This is a bundle of stocks. Think of it as a basket that has a whole bunch of stocks in it. All these stocks together, they provide diversification for you. So if you don't want to have to take advantage of all the fractional share trading that exists nowadays, just put them all together in one basket, and there you go. The most popular is probably the S&P 500, Standard & Poor's, and that holds the 500 most valuable stocks in the U.S. market. You could also do the Russell 2000 if you really like small cap stocks, and, you know, the Dow Jones, anything else really, but S&P 500 is going to be your best bet. Now, a lot of people will ask, should I diversify into a bunch of individual stocks, pick stocks, try to time the market? And the answer is no. It's very simply no. You will not win. You may win, and if you did, you might as well think that you just went to a casino and won big at a nice hand of blackjack, because that's about how lucky you have to be to win long-term picking stocks individually in the stock market. The best bet, as always, is just to invest into something like VTI or SPY or something like that that mimics the market, and the market is generally the S&P 500. It's that simple. If you really want to invest and try to, you know, play your part, play individual stocks when you want to, when you think you have a good idea, then I wish the best of luck into you, because you could be amazing at that. You really could. You could be one Buffett. You could be. I honestly don't know if I spelled that right. I don't know if the number of letters in Buffett, but you could be Warren Buffett. You could get a 20% return. You really could. If you believe in yourself, I believe in you. Or you could become Kathy Wood. And, you know, apparently that's a good way to make money in selling terrible ETFs. But what do I know? That's about all for the stock market. See ya.